Hello value investors, thank you for joining me. Right now we're going to go over Slack's Q2 21 results. Before we get stuck in, if you're interested to know which stocks I own and why, come over to my marketplace on Deep Value Returns on Seeking Alpha. You can do a totally free trial and see a highly concentrated portfolio of stocks that should help you outperform the index. So let's get started. The reason why Slack sold off so significantly after its Q2 21 results was most likely due to this revenue guidance here. So you can see that in their fiscal 2020 results that they were growing very aggressively, and there was a very strong rhetoric coming out from the company that they were going to be very strong into productivity, collaboration tools, and there's still a lot to like about Slack, but ultimately that whole theme of working remotely doesn't seem to be playing out that well. And we can see here that at the start of the year, Slack's Q1 results were growing at 50% year over year, but the guidance right now is coming in quite slow. So you can see this rapid deceleration from the start of the year and over a 12-month period, which should have been a really favorable environment for Slack. There's this really deceleration in revenue growth rate. And this figure here of 28% is actually even more significant, because if you compare, and you can see that analysts were hoping to see around 31% revenue growth rates. So there's this rapid deceleration, which is one problem, but the other problem is that it's really, the revenue guidance is coming in below analyst estimates. So it's quite a significant problem, because the whole thing with Slack was that it's supposed to benefit from this environment, the work from anywhere environment. So that's one thing. Another thing that I wanted to mention was that last week PagerDuty, the incident report company, reported results that kind of were more or less favorable, but it also sold off quite dramatically. So we see this theme taking place overall, that companies that should be benefiting from this acceleration of digitalization are actually not transparent to be growing into that with strong tailwinds. So although the market had previously felt that these stocks were new era stocks and that they were well worth trading at 20 times sales, actually it transpires that maybe that's just not really happening. So there is still stuff to like about Slack, and I point here to the fact that customers are really coming onto the platform, and that the founder and CEO Stuart Butterfield argues that into August this trend has continued. So there's this acceleration from Q1 to Q2, and it's continuing into August. And if you remember about Slack, they've always made the case that as Slack gets more customers attract more customers, and that there should be this virality happening with the company. But Butterfield also makes the point that this can take several years for each new customer to really hit their peak revenue contribution. So it is a funnel, and it's working the funnel, but maybe expectations had got slightly out of hand. One thing I will mention is that on the other side of the coin is billings. So billings is a forward indicator in SaaS companies. Billings essentially kind of telling you as the owner of the company where its revenue guidance is going to be going over time. So a lot of these companies book up front a lot of the contract, and then they recognize it over time. And you can see that the billings are really kind of starting to slow down. So if you look how it was in 2020, the company was very strong here in Q4 2020, and now it's really slowing down. So it's kind of, that's what investors are really looking at. They're probably most likely looking at billings and thinking, okay, if billings are coming in weak, that means revenue is going to come in weak. So it's probably not worth paying a premium for this company. Another thing that I will point to is that after the sell-off of 19% overnight, and the company raising its guidance, if you take this high-end figure of 876 million for the year, it puts a stock trading at approximately 15 times forward sales. Now this is not earnings, this is sales, but in the last several months, I would have said most companies, if you just attach the word SaaS to it, they were getting priced at 20 times sales. Right now, the market is saying, okay, enough is enough. We're not going to be paying 20 times forward sales for companies that are clearly not growing sustainably at the level that we thought they were. Additionally, I will just mention that the rule of 40 is an interesting rule that is used in the SaaS world. It's a measure to compare the company's growth prospects and profitability. So you can measure this in many different ways. You can look at the profitability as an EBITDA number, you can look at it as a free cash flow margin, non-GAAP operating profit margin. That's the one that I kind of looked at, and you can see that in the rule of 40 number that Slack is coming at approximately 32% if you take the high end of the guidance and the low end of the non-GAAP operating loss. So if you kind of look in the most favorable scenario in the rule of 40, it's coming up as 32%. And investors are kind of hoping, obviously, that the company's lowering the bar so that they can later on sandbag their results, but the market's not taking it. The stock sold off 19% overnight. So I'm just thinking to myself whether it's really a case that the tech is going to sell off, or actually the most likely result is the market's going to start being more discerning, and companies that have, I think, a path to profitability, strong growth potential of, let's say, plus 35% year over year, strong visibility, they can still command a high premium, I think. And I don't know what a high premium will turn out to be over the next 12 months, but I think that those will still continue to trade at a high premium, whereas these kind of middle ground stocks that kind of have the right rhetoric, but the results are not really translating themselves, most likely are going to continue to see a sell-off in results over time. So I hope you found this video useful. Don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns, and I'll tell you the stocks I own and why. It's a curated portfolio of high concentration stocks, and you're likely to find stocks that help you outperform the index over time. Thank you for watching. Bye.